What comes to mind when you hear the term fintech? Is it the convenience of mobile payments? Is it the buzz around cryptocurrency? Or is it the promise of seamless financial transactions? Fintech, short for financial technology, has become a bit of a buzzword in recent years, revolutionizing the way that we interact with money and challenges traditional banking systems. In this video, I'm planning to dive a bit deeper into fintech overall and to have a look at how it impacts traditional banking. From startups to established institutions, fintech is reshaping the way that we manage, invest, and even think about our finances. So buckle up as we take a closer look at the intersection between finance and technology and how finance is continuing to evolve in this digital age. Let's start off with some interesting facts that might highlight the growth and impact fintech is having on the world. In 2020, global investment into fintech startups exceeded 105 billion USD, and out of that, over 100 of those companies were valued at over $1 billion. The global mobile payment transaction value is projected to surpass $4.7 trillion by 2025, and it's currently experiencing a growth rate of more than 25% per year. The COVID-19 pandemic accelerated the adoption of digital banking, where it's estimated that 76% of users in the Western world now conduct their banking via digital services compared to traditional banking services. The global peer-to-peer lending market is projected to reach 560 billion in value by 2027. I've talked about peer-to-peer lending on the channel before. If you're interested, I'll leave a link down in the description below to that video. Feel free to go and give that a watch in your own time. The arrival of fintech has brought forward a seismic shift in the traditional banking landscape. By either reshaping the financial landscape as a whole, making traditional banking redundant in certain areas, or they have kind of forced traditional banking systems to adapt to these new methods. And this has occurred in several key ways. Firstly, fintech companies have established a way to make payments outside of traditional banking methods. Think of things like mobile wallets, as well as peer-to-peer lending platforms have emerged. These offerings provide customers with greater convenience, speed, and accessibility of funds and transactions, essentially threatening traditional banking systems as a whole. Simple examples that you, the viewer, would most likely be aware of or familiar with would be things like Stripe, Venmo, Square, PayPal, Cash App, TransferWise, just to name a few off the top of my head. And I've actually talked about a bunch of these on the channel as well. Number two, fintech platforms have revolutionized lending practices. These types of lenders have streamlined loan application processes as well as improved credit assessments. This ultimately has increased access to financing for both individuals and small businesses. Peer-to-peer lending is something that will eventually take over from traditional banking because it simply is a better way to conduct finances and remove a middleman. I've talked about it more in depth in my video on peer-to-peer lending, which, like I mentioned just before that, I have linked it down in the description below. Thirdly, fintech has facilitated the emergence of digital banking, allowing customers to perform their transactions and do their online banking completely in the digital space. This has significantly reduced the need for in-branch visits, posing a real challenge to traditional banks that rely on brick and mortar infrastructure, which is becoming more scarce every single day. Now, what are the pros from fintech? Because customers really have reaped the rewards of these initiatives. Firstly, fintech has enhanced financial inclusion, especially to those in underserved populations who don't have access to traditional banking systems. A company called M-Pesa, as one good example, launched in Kenya in 2007. A key highlight is that it allows users to store and transfer money on their mobile phones even without a traditional bank account. This company has benefited individuals, particularly in rural and low-income areas, providing them with a secure and accessible way to both manage their finances and conduct transactions. Kiva is another company that is an online crowdfunding platform. Through the platform, individuals can provide microloans to both entrepreneurs and small businesses, helping them access capital. Tala is another fintech company that leverages alternative data sources, such as mobile phone usage, as well as people's behavioral patterns to provide microloans in emerging markets. By analyzing this data, Tala aims to assess people's credit worthiness and then provide loans to individuals who potentially wouldn't fit the bill of traditional banking lending practices. And finally, a fintech company called Paytm, which is based in India. It's a digital payments platform that has transformed the way that people within the country conduct their general banking. And it provides a range of services, including things like mobile payments, the ability to pay your bills through the app itself, as well as allowing you to transfer funds willy-nilly, to put it simply. And this is generally offered to people who don't have access to traditional banking systems, financial institutions, or actual branches. So it basically has created an ecosystem for these users within the country, which is a really cool incentive in my opinion. These examples demonstrate how fintech companies have used technology as well as financial innovations to close the financial inclusion gap. On top of this as well, fintech has improved the customer experience as they are specifically providing tailored solutions in the realm of finance. This level of personalization has transformed the way that people manage their finances. It's also increased the overall baseline of financial literacy in these spaces where it really wasn't a key focus for a long period of time. And it also has empowered people to make informed financial decisions, which is really important. It's something that I personally believe very strongly on, and others who are in relatively stable financial positions definitely would as well. Now let's talk about how traditional banks are facing significant challenges adopting to what the fintech space is kind of injecting into the world of finance. One key challenge is competition. Competition, in my opinion, is really healthy because if someone else can do it cheaper, it means that I theoretically should gain better benefits from them. Fintech startups at this current point in time are generally unburdened by legacy systems as well as bureaucratic processes. They are generally also able to quickly adapt to market demands and provide cutting-edge solutions when solutions are demanded. However, traditional banks generally have to grapple with the need to balance innovation with security and compliance, which is something that fintech definitely will get dragged into eventually. But these new startups that are quite small are able, like I said, to tailor personalized solutions to a key target audience, whereas traditional banking as a general oversight needs to comply with basically everything because they are behemoths. So essentially, fintech companies often push the boundaries of existing regulation. To address this, strong frameworks really are needed to protect customer data, prevent fraud, and ensure financial stability. And honestly, these frameworks are really important. They definitely do help to ensure that personal information is secure and that the overall banking system is stable and reliable. And fraud is something that we're not getting into in today's video, but we want that to be minimized. Fraud is bad. Fraud is a scary thing. Lots of people are affected by fraud all the time. Not getting into it right now. So here's where it gets really interesting in terms of the adoption page and the challenges that traditional banking faces. Traditional banks invest heavily in cybersecurity and they engage with regulators to foster an environment that does two things. Simply put, keeps the customer's information and the customers themselves safe, as well as making sure that the system works as intended. And so while fintech poses challenges to traditional banks, I think that there is definitely an awareness of the opportunities to kind of cross-pollinate and actually incorporate fintech practices into traditional banking systems whilst having that overarching regulation and safeguarding in place. The key word here is collaboration between these two entities, where we've seen some of this starting to take place in the real world. The simplest example is if you're in a Western country, you probably have a big bank You probably have a bank account with one of them, and you probably have an app that you can do a hell of a lot of stuff in without specifically needing to go to a branch anymore. That is just purely innovation and development of the technology involved in getting that all together. It's just a very simple example, but it shows how they have been kind of molded together, where they've taken ideas from the fintech world and implemented it into their own systems for your convenience and your accessibility, timeliness, and security all in one. On top of this as well, traditional banks are traditional banks. They have a hell of a lot of data on their customer base, which they can use to tailor individual products to benefit their customers. Really good example is I myself would be very interested in tailor-provided solutions for me to manage my mortgage. They will still make money, being the banks, if they change the way that loans are structured or how I make repayments to my loan that benefits me, but it would also keep me or retain me as a customer instead of me considering refinancing and going elsewhere because there's better competition. Fintech companies can analyze this data and make proposals to traditional banks on ways that they could bring in new customers, retain existing customers, and provide better solutions that work out in terms of a cost basis better for both parties. It's a really cool initiative, really cool idea, and I'm very excited to see where the space goes. There's no doubt that the rise of fintech has disrupted traditional banking over the past 2 to 3 decades now. We're moving into that 3-decade space. I feel old. I'm going to say it out loud. It's actually wild to me that where we've come to today and how convenient banking is, I can only see it improving again because ultimately competition's out there. People are going to come up with really great ideas, and banks would be stupid not to implement these solutions. Otherwise, fintech will essentially crush them. Simply put, the key takeaway is that fintech solutions has implemented more convenience, accessibility, and speed when it comes to transacting in general, which is a key benefit to users, to customers. Overall, the whole point of this video is that fintech is a welcomed thing because it's making it more convenient and better as a user experience. And by it, I mean banking. All I can say for now is that the ongoing transformation of the financial industry will continue to shape the future of finance, hopefully benefiting customers at the bottom line. That's all I really care about because I am a customer. I don't own a bank yet. And that's pretty much all I had to talk about today. So hopefully you got something out of this kind of different financial topic video. I thought it was an interesting one to cover and I learned a lot myself. If you did, hit that like and subscribe button down below. As always, I really do appreciate the support and I will see you in the next video. Bye for now.